But let's get you some recommendations then on Trade Corner. All right, connecting with Dr. Narayan, we have Manas Jaiswal and Kunal Bothra. Dr. Narayan, your top strategies?
Well, at the moment, the Nifty seems to be steady, so we are happy to continue with some long position recommendations. Asian Paints is something that I find has staged a breakout past after a pullback down into support zones. So I would be a buyer in Asian Paint at the current levels with a stop about 15 points below and looking for a target at 1425. The second stock that I would want to suggest also as a buy would be in IDFC First Bank, where some sustained sideways price action has been in progress for quite some time, but all this sideways action was happening as a higher bottom formation on the charts, as it were. So today's indication that it may be about to flex its muscle and go higher, it kind of encourages me to give a buy call here with a stop at 41 and a price target in the short term at 47.
All right. Meantime, Manas, what's on your radar?
See, first one is from IT space, because I think just 2 days back we saw a sharp bounce back in the Nifty IT index. Yesterday we saw some profit booking, but again at lower levels today we have seen a lot of buying interest. So I would like to go with Tech Mahindra, because there are some sign of reversal on the charts. The stock was making lower top, lower bottoms from the level of around 825, but now it seems that the stock has already made a base near to 660, 670 levels. And since today stock has given a breakout above 685 levels, I believe that even from current levels, you can see almost 30 to 40 rupees up move in Tech Mahindra. So here my target would be around 710 and stop loss should be 680. And second one is a sell call on Eicher Motors, where stock has been making lower tops and lower bottoms from the level of around 2100. Now for last 4-5 trading sessions, it was taking support near to 18,700. Today it has broken that support with higher volumes. I think in the last hour of trade, we have seen a lot of selling pressure in Eicher Motors. So I believe that the stock can go down and test 18,000 mark. So take a short call here. The stop loss should be around 18,900.
Okay, and finally then, Kunal, what exactly has caught your eye this afternoon? Very divergent trends yet again with the frontliners on the broader end of the market.
Absolutely, Avan, and which is why I think it's case to be more stock specific at this hour, and especially with the ones which are showing some degree of momentum, and I've picked up two of them. The first one is ICICI Pru. I think again it's a stock which is into a very strong uptrend on the medium-term charts. Look at the way the stock has given a price uptrend of higher highs and higher lows. Comes back in terms of corrections to its 50-day moving averages and taking supports and continues to ride up higher. So I think even this time around a very similar pattern is in the offering for the stock price. Hence I've suggested a buy in ICICI Pru, expecting the previous high to be taken out and the stock to make a new short-term high. So that's a buy, 404 as a target, and stop us at 380. And the second would be a buy on MFSL, Max Financial Services. I think even this stock has finally steadied its momentum. It's come back above its 200-day moving average as well, and volumes in the last couple of days on the cash side are also quite encouraging. So MFSL is also a buy, 444 as a target, and stop us at 420.
Right. Nitin Raheja, co-founder at AQF Advisors, is now with us. Nitin, thanks so much for taking out time for us. When we just look at the markets, the setup going into the numbers, do you think the expectations are pretty low, or the consensus estimates are still pretty high on most of the companies?
I think from a market perspective, if you ask me, the expectations are pretty low. The consensus numbers, though, continue to over-expect. I would think that we would probably be more disappointed than surprised on the upside, considering the kind of macro headline news that we have seen, whether in terms of the IIP numbers, whether in terms of yesterday came out the trade data came out, and export growth has seen a degrowth, and so on and so forth. So I would think that the markets are factoring in some of the negative numbers, although consensus estimates yet continue to remain on the upside.
Right. So when we look at the start of the result seasons, what do you make of the result season so far? You think it's decent? You think the numbers should be in fine? Because a lot of people are talking about slowdown for the last 2-3 months, and that's why the sense is that high growth may not be possible in the near term, or at least in Q1.
Absolutely. I mean, the macro numbers that have been coming out, and also the larger industries. So, I mean, if you take, for example, autos, and autos comprises a huge chunk of the so-called manufacturing GDP that we have, is clearly showing you signs of, has shown signs of degrowth in the first quarter, and the peripheral impact that flows through with that across. You've seen consumption, concerns being talked about after a very, very long time. So clearly all the indicators have shown. Now, generally speaking, when the result season starts, the first bit of numbers are always very encouraging, because these are the companies who are doing well and who are anxious to come and tell the people, yes, this is what we are doing. And so you always see the better numbers come out. It's only towards the middle, or when we get into the last week is when you start seeing the issue, the companies who are not doing that well. And as you get into the month of August, in the first 2 weeks of August, is when you will really see those numbers, which are most companies who are not doing that well. So the initial numbers have been the tech companies, some of the private banks, and even if you take, say, tech companies, they've been encouraging numbers as such. But now, but they were, let's not forget, they were for the previous quarter, and we've really seen the rupee firming up. So I think they're going to face challenges going into this quarter as such. While on the at one end, the order bookings have been good for the tech companies, but I think the rupee will continue to weigh, and we've seen these companies essentially move with the rupee as such. The initial private banks have have declared the numbers. They've been a little bit of a mixed bag as such. So I think initial numbers are, it's difficult to take it across the broad spectrum and extrapolate on that.
When you talk about the banking names, you think this time around it will be different? Each bank will have to be treated separately, because the numbers that you're getting seem to be pretty mixed.
So when you take the banking name, now there are a segment of private banks which have been chronic laggards and underperformers, and there are some which are in trouble. I think they will continue to, I don't think you will really expect surprises unless and until there is a bigger number in terms of the NPA out there. And there is a segment of private banks which is doing well. Among them, there will be these corporate private banks which anybody is expecting, and a lot of that is already built in the prices. Those banks have outperformed the market. Any disappointment that comes out there, whether in terms of higher NPAs or so, could see some sort of a correction. We've already seen a little bit of a correction manifest out there, but they are broadly in line to deliver the numbers. As far as the PSU banks are concerned, I think that is really individual bank oriented as such, because a lot of them have done their cleanups. We should see the impact of the GSEC, low yields impacting the treasury book and giving them an upside out there. But they are really very specific as such.
Okay, just let's take a look as to what's buzzing in the broader end of the market. Lots of stocks which are gaining traction. CG Power is a smart mover in trade today. In fact, you're seeing it build up traction by a good 9.5%. There's DHFL, which is finally seeing some reprieve at 55 rupees. IRB Infra is upping its game. You've got Equitas in the green. Jet Airways, Reliance Capital, of course, Pankaj did flag off some of these names. KNR Construction on the back of strong numbers. HDFC AMC is also looking very smart. RCF, Finolex Industries, Colgate, which is going to come out with numbers soon, is active in trade. In fact, Dr. Narayan, would like to get in your thoughts on some of these stocks on the charts. CG Power as well as Equitas?
Well, I think if you look at Equitas, that space suddenly seems to be becoming active, because Equitas has a great run today, and so has Ujjivan for that matter. So suddenly there seems to be some amount of action here. Coming to Equitas, I think at the bottom end it has made a decent price pattern, and I do recall that we had a couple of trading calls for a buy in this, because at the lower end of the range it had made these very interesting looking price patterns on candlestick, which suggested that there was demand at the bottom. And after a doji, we had a couple of lower shadow candles, and then today's price action seals all that in with an indication that the rally is on. What it requires is some further new momentum here, which can carry it and perhaps allow the rise to sustain. So I think with a kind of a backup coming up in the other let's say Ujjivan type stocks, you could expect this to continue. CG Power is also showing some upward price action, but it may be a little too early to call for some sustained move here, because it's coming at the end of a very, very strong decline, which clearly smacks of portfolio exits from the stock. So therefore, I wouldn't want to rush into it, even though today's price action seems to be quite positive. But I would want to see some more follow price action before I would want to venture in with a buy call on this. But that said, maybe some shorts are getting covered here, maybe some adventurous buying going on. It's for those go-go set, but not for the others.
Meantime, there's DCB Bank, in fact, which we flagged off at the start of the show, that's continuing to reel under pressure as the stock has declined the most in 3 years, incidentally. We spoke with the management about the quarter gone by, the managing director and CEO, Murli Natarajan, and he was very confident about the company's portfolio, saying that they aim to double their loan book in the next 3 to 4 years. Let's just revisit that conversation.
The distribution that we have put up in the last 3 years or so, and the fact that we are targeting small ticket mortgage loans, small ticket SME, which has a huge potential in the country, I believe that maybe there may be an issue here and there, but overall, our aim is to double the balance sheet between 3 to 4 years. I don't see any major issue with our portfolio at the moment. Quarter to quarter, there may be a blip here and there, but that's not, that we don't believe that that's a trend. The only area of focus for us has been retail, SME, agri-inclusive banking. Having said all that, we have adopted a very cautious approach since January, looking at the current environment. We are looking at our credit policies constantly to make sure that we don't take any undue risks.
Okay, Nitin, now let's talk about some of these banks. DCB, of course, but we've got IndusInd trading higher today. We've also got, some of the others like an HDFC AMC, for example, seeing some pretty strong volumes. And we're still waiting for earnings on Yes. What are you tracking within the financials?
So I think within the financials, as I said, we are looking at some select private banks. Among them, we think that the corporate banks, although they've had a run-up, are essentially buy on dips because, I think they have come out of a long cycle, and I think given the new managements in place, have yet a long way to go in terms of the kind of wealth that they can generate for shareholders. I think the AMC space is good, but I think the valuations seem to be pretty full at the present moment, especially with the only AMC of merit worth investing in out there. I think the insurance space looks very interesting. We see value sitting there. We see value in some of the NBFC space very, very selectively as such, especially the ones who don't have a large corporate or so-called, if you were to call it, the real estate oriented book as such. And so even within the real estate thing, we like some of the established NBFCs because we think that they're going to gain market share at the cost of some of the other players being in trouble. And all the pricing pressure that this space had seen prior to this a year before is going to be a thing of the past. And once the dust settles down, these NBFCs are going to consolidate and become bigger. So I think within the financial space, we pretty much like it selectively across the spectrum.
Coming in, Nitin, just wanted to get in your take on Reliance Industries. What is it that you're hoping to hear from the management when they come out with their numbers? Any surprises that you're expecting?
quite honestly, I think it's more or less built into the market that the core business is not really going to give great numbers, is going to be subdued, if I were to call it. I think people are really looking for pointers with regard to all the other businesses and what they plan to do with it. In terms of the deleveraging of the balance sheet, where have they reached with regard to the so-called infra InvIT that they're looking to move some of the tower assets into, and so on and so forth. The geo traction and listing, or separate carve out. I think what's happening on the retail side, I think these are the areas where people will be focusing more on.
And a couple of other stocks today. Federal Bank is seeing quite a bit of a knock. We're also seeing on the Tata Elxsi, let me just bring that one up as well, on the back of earnings, that's seeing very, very strong volumes in today's trade on the downside. Couple of these names, Kunal, on the charts.
So yeah, I think Tata Elxsi could be a bit of I think a trading opportunity over here. The stock has corrected from I think 930, 940 levels just 2 weeks back to now 740, and today's volume is one of the highest in the last, I think, so many months for the stock price. The open interest is up, I think, 66, 67% on the F&O on the current month futures side. So that also probably indicates that shorts would probably want to roll over the positions from the current series, and maybe they would want to carry forward the positions to the next series. So what this correction could probably bring in case for Tata Elxsi could be that the stock could go into a multi-month downtrend. So even at current levels, yes, the indicators are oversold. You might see a pop off or a bounce of 30-40 rupees into the stock price just based on the oversold nature, but it should not reverse the trend as such. And I believe the stock should eventually try and break even that psychological 700 mark as well over the next couple of weeks. So I would take this as an opportunity to start creating shorts over here, and at every rise of 20 to 30 rupees, we probably would want to average the shorts higher. That's for Tata Elxsi.
Okay, so Tata Elxsi earnings, Federal Bank also on earnings. We've got MCX is the other one that's reacting very strongly to earnings today.
HDFC AMC is also
course,
reacting
yes.
to earnings,
Yeah.
so that's the second day in a row that you're seeing. But let's talk about earnings today. Let's talk about Wipro. Pranay is also with us. Pranay, Wipro will declare numbers in a couple of hours. What are we anticipating?
Well, Wipro is expected to be amongst the most subdued in the Tier 1 pack. Even the management had given a very muted guidance of minus 1% to a best of 1% growth this quarter. So we are penciling in a 0.4% growth in constant currency terms, but because of an expected 40 to 50 basis point cross currency headwind, the dollar numbers on the top line are expected to be flattish at about $2,076 million. Also, you will see an impact of approximately $9 million from the divestment of Workday, and if you add up all this, then along with the management commentary that growth is expected to be patchy, nothing great is actually expected this quarter. At the operating level, you should look at the EBIT margins, which are seen declining by about 80 basis points approximately. This is because of the usual headwinds that we see in Q1 with regards to wage hike, but it is partial for Wipro since it takes effect from June, so just a 1 month wage hike for them, besides the impact of rupee appreciation and also the on-site cost pressures for them. If you include the products business, then the revenue should be declining by about 0.9% and profits seen down by about 4.6%. Amongst the key monitorables would be the Q2 guidance, which we are expecting to be between 0.5% to 2.5% at best. Also, the management commentary on the margin trajectory in this time of increased competition and also rupee appreciation will be important, because a trend in subcontracting expenses has also been weighing on their margins. Besides traction in key verticals like BFSI, particularly capital market segment, which has been a little soft, healthcare, communication, energy, utilities, and momentum in digital. Also, a couple of other things like large deal wins, progress on ramp-ups, deal pipeline, how's the performance looking like in the top accounts and the large client additions. These will be the most important things to watch from Wipro, but the numbers are expected to be amongst the most subdued in Tier 1 pack.
Thanks, Pranay, so much for that. Let's also... Nitin is still with us. Nitin, how would you approach IT companies? Again, you would focus on the companies that have high digital growth. Would that be the area of focus? I know we spoke about Infosys, the way the numbers came out, the way the stock reaction happened. But overall, IT as a sector, again, will you be very selective now?
See, the IT sector for some time you've had to be selective because each company has its own strategy and is facing its own set of challenges. While the mid-tier companies are creating focus areas and building strengths in that, the larger companies are really trying to evolve themselves in terms of how to meet some of the new nimble-footed challenges of technology. So I think it's something which is stock specific. You're clearly seeing an Infosys deliver very good numbers, great order booking. You saw TCS having a little bit margins mutated. Wipro has been struggling for some time. So it's not a broader trend that is hitting. Yes, digital is a great part of this, but any company you pick up and see, they will declare that digital is anywhere between 25, 30, 35% of their business. So I don't think that itself again becomes a tracker. I think the important thing really is in terms of which markets are they focusing on, which segments of the market, how those markets are doing, and what's the kind of order booking that they're doing. Infosys clearly has reflected that in terms of the very, very strong order booking that they showed up in the last quarter and even in the prior quarter, and the stock has quickly seen a re-rating happen, and so on and so forth. So I think IT will have to be played selectively. Also, don't forget that generally speaking, whenever the rupee depreciates, you see IT doing well, and there is a positive sentiment. This quarter going in with the rupee strengthening, I think IT will also have that headwind playing itself out. But IT, I would think, is less volatile. It's kind of acquired a defensive manifestation in the last few years, and that's how we would look at it.
I just want to check in as to what the fertilizer stocks are up to. It's no decisive trend. While something like a Madras Fertilizers is active, RCF is gaining traction. GNFC to a certain extent is doing quite well. Chambal is taking a bit of a backseat though. Nagarjuna Fert is up in trade. But Nitin, incidentally today we were speaking with the fertilizer secretary talking about the outlook for the sector, and they said that on improved monsoons we can see some strong demand and things really improving for the sector as a whole. How are you looking at this space? Do you think that we can see some traction here?
We don't like the segment at all, primarily because it's a controlled segment in terms of the pricing. The whole move which was to take place and which people had started looking at fertilizers differently was with the post Aadhaar and direct pay through happening. People were thinking it will become a quasi distribution game with brand building happening. None of that has yet taken place. Working capital cycles are stretched in the segment, and the pricing determined by the government miscues the sales between NPK. So as a segment with so much of control and with large working capital cycles, it's not something which really excites us.
Talk about the auto pack. Does anything look interesting now, with everybody factoring in very, very low expectation in terms of auto growth, and auto gave the first signs of slowdown, so probably it will give the first signs of pickup, if any, as well. Do you think that's something which you would want to place a bet now or wait for a couple of quarters?
So I think auto companies are looking interesting. Whether it's the passenger vehicle companies or the CVs as such, primarily because I think the kind of valuations that these stocks have come down to, they are now starting to represent value sitting there. Secondly, with the interest cycle on the downtrend as such, it works well for them. Thirdly, raw material prices have remained relatively benign. And once the stock in the system comes down to normalized levels, which could happen probably over the next couple of months, I think autos should revert back. So in my view, autos is a good contra-cyclical bet to look at, because if you're talking of a revival in the economy, the festival season coming in, you are going to see autos come back, and when they come back, these are not the type of prices that you will get these stocks at.
All right, let's just get in a view then, Dr. Narayan, as to what the outlook is on some of the stocks that are under pressure from the frontline index. Apart from Yes Bank, of course, there's GAIL and ONGC from the oil and gas basket. What is your take here?
I think GAIL has been under pressure for quite some time. It dropped down with a big gap sometime in early June, and after that there has been non-stop pressure. And even as we speak today, the stock is dropping to a new swing low on the daily chart. So at the current levels also, it really doesn't look like there is any support level in the immediate offing. So I think it could well drop by another 5-7% more before some sort of relief would were to occur. Similar seems to be the case with ONGC, where also some continuous pressure is on, and today's price action too is not very edifying. And in fact, if you look at it, I would think that fresh downside action is being signaled at the current prices around 148 or thereabouts. So maybe ONGC, those who are bearish on the oil or energy space, I think ONGC might present them with at least another 3-4 rupees to the downside at the bare minimum. So that's a short at the current levels of 149.
All right. Those are a couple of the stocks that CK is looking at as well this afternoon. Let's also talk about pharma. Nitin, from the pack, Sun has been moving for like about a week now. But that apart, we've had very, varied reports coming in, some willing to still play on the domestic front, companies that are focused on the domestic front, and some saying that that the worst is probably over for the sector. What would you say?
So I think pharma again is, as a pack, has facing its own set of challenges as well as opportunities. From a challenge perspective, of late, we've again seen this whole US FDA related issue with respect to the Indian manufacturing facilities crop up, with a few companies coming up on the radar. As such, even as late as today, we've seen news coming out there, which continues to act as an overhang at one level. On the other side, you are seeing, for some strange reason, for the first time in many, many years, we've seen the domestic market also come under pressure. One wonders why, but we've seen that happen in the numbers that we saw last month. Against that, I think clearly, the US market has settled down in terms of the pricing. China seems to have opened up, and China is, in terms of size, the second largest market in the world. So that, more and more Indian companies are starting to look at China as that alternate, and it's not something which is going to be as profitable as the US, considering the model which China has opted for in the whole tendering process. But it's a huge market, and it opens up another door. And Sun has been one of the earliest to talk about China and the opportunity in China, and they've started already moving in that direction as such. So, but pharma, again, as I said, one has to look at stock-specific companies. Clearly, valuations have come down, and they are moving into regions where they are attractive to look at. But it's not a sector which has any tailwinds behind it at the present moment.
Yeah, one will have to really see if we can get a material improvement in the quarterly numbers for the pharma sector as a whole. Quite a depressed sector so far of late. But Kunal, we have seen some fervor within the pharma stocks. There has been a little bit of a spurt of buying activity. What are your observations?
So I would believe that pharma indices probably have formed a short to medium term bottom over here, Avan. I think that big correction which was playing through in the stock, at least in the last 2-3 months. Case in point, in the pharma index, I think in the month of March or April was closer to 9,500, and it went to almost sub 8,000, 7,700. If I'm not wrong, was the low for the pharma index. So it was a drop of almost 1,600 points for the pharma index. So after such a kind of a sharp fall in a matter of 1 to 2 months, the index went sideways, and now it's forming signs of double bottom, and then there are some indicator pattern breakouts as well for pharma indices. So I believe that on the back of this, that this is a very strong and a robust move for pharma stocks, and should continue to move up higher. And the good part I like about about this move is that it's been led by predominantly the large cap names, and especially the Sun Pharmas, then the DV Labs, Dr. Reddy's, etc. So I think that's where I believe that there's more focus, because if these large cap stocks, they continue to move in a very stable manner, steady uptrend, backed up by a couple of fundamental news also which came across in the last couple of days, then I believe that there is more solidity which adds to the up move. So I believe strongly that the pharma indices have formed a short to medium term bottom.
Right, Kunal. Nitin is still with us. So Nitin, we were talking about pharma and you spoke about that. I just wanted to understand in pharma, how would you approach the sector in terms of details? So, would you go with something like, these diagnostic players or some companies that have a decent exposure to India, probably less to US, or you would go with companies that have full exposure to US and, probably the risk pricing over there is pretty high in the market?
So, there is, so if you take the diagnostic players, say for example, that you talked about, they're great business models. They are like a quasi consumer company with India exposure and so on and so forth. However, if you look at the valuations of these companies, and these are companies which will give you good steady cash flow over the next few years. However, if you look at the valuations of the company, they're pretty much there in the price. And given the kind of growth that they have exhibited over the last year or so, I think they're fully fairly priced. When you look at, so our orientation would be more towards companies who have a little bit of a balanced, they have an India exposure, but they also have the US exposure. More importantly, what we're looking for is that, is there any sort of US FDA related issues, because those can drag on and can take a long time to solve. The risk out there is, of course, that you don't know if that company can land up with the issues going ahead. But I think clearly one of them is there a US FDA issue? The second is, what is the pipeline of products that it has and the kind of potential that it is addressing in terms of the Para 4 or the ANDA products that they typically are sitting on as such. And, look at the distribution part in the US in terms of how are they distributing in the US. So it has to be a company which has a profile in India as well as in the US. And the third and last element is what are the valuations that it is capturing in. There are a lot of pharma companies who are in the mid-tier range, who are growing and who are trading in the mid-teens and so on and so forth. So that's typically a kind of space that we would be attracted within pharma.
Nitin, thanks for joining us this afternoon.